Hi everybody, it's Wednesday, the 8th of August, 2018, and the S&P 500 did lose a little bit of ground here. It wasn't until right at the end of the day where that sell-off occurred. You can see here we lost some ground in the last 10 minutes or so, but we're still above a rising 5-day moving average. We're still above the week-to-date volume-weighted average price, or what's now the 3-day. And if we were to come down through that level tomorrow, I think that we'll still be looking at 284 to 283.75 as our first more important level of support. And I'm not calling for that to happen because the trend remains higher. It's something to be aware of that, if you're long the SPY, then be aware of where your risk should be in accordance to, the possibility that it could pull back down towards that level. It is where, again, we have the 5-day moving average, the volume weighted average price from the gap lower and reversal last week, as well as this prior little peak. For the NASDAQ, we did finish above the 2-day volume weighted average price and the week to date. And looking at a very short term chart, 2-minute, you can see we lost some ground here, but not as, at the end of the day, but not as much as the S&P. If we see further pullback, I think well, if we see some pullback rather, because it hasn't really begun to yet, I think this is the key level to keep an eye on. The volume weighted average price from this recent reversal, as well as the 5-day moving average down at, basically 180.50 to 180.25. And then, of course, if there's any pivot levels in that area, that's where you want to be looking as well. The Russell 2000, as we noted, if you're long here, at this point, the stop should go below today's low. That is, we came down and touched the volume weighted average price from the all-time high, which actually is right there, and then the buyers stepped in today. So that's a good sign, and that shows why that's now an important level. It's also the most recent relevant low with a rising 5-day moving average. So that will be a key level to hold on to. And meanwhile, the market seems as though it's still building energy for an upside break. The only thing that would, change things for the intermediate term trend is to be back below 166.50-ish. Semiconductors continued their follow through to the upside. If you bought it yesterday, as we mentioned right here in the midday video, then I think, again, your worst case stop is below today's low. Maybe you took a little bit off already. I'm not here to, tell you where to feed it out, but, you basically, by this point, once you have a dollar or so gain, I think it's prudent to look to possibly taking some off. That way, if you do get stopped out, you don't end up being a net loser in the trade. We are approaching that. Well, let's look at it again on 195-minute chart because I drew it more accurately there. That trend line is up near about 110, and I think that's a level that still looks likely to continue to move up towards financials. Again, I'm going to repeat that, we've had a nice run right up into this prior level, and it's just best left alone.